other companies who then manufacture and sell products under that name, like microwaves, compact refrigerators, wine coolers. The recent news flow for Emerson Radio is typically very quiet. This is not a company that puts out a lot of press releases about groundbreaking developments. Their business is mature and frankly in decline. The consumer electronics market is brutally competitive, dominated by giant global brands. The value of the Emerson name isn't what it used to be. Looking at the financials tells a stark story. Emerson Radio's licensing revenue has been shrinking over the years. They are technically profitable at times, but profits are small and inconsistent. The most interesting part is the balance sheet. For a long time, the stock was considered a net, meaning market cap was less than net current assets. That can attract deep value investors betting the assets exceed the stock price. It's a melting ice cube. Assets may remain now, but operations are shrinking. Now that we've taken a close look at each company individually, let's put them side by side to see how they stack up. It's important to understand that these 5 stocks represent very different types of investment risks. On one end of the spectrum, you have Aethlon, PTIX, Immuneering. These 3 are pure-play biotechnology and medical technology ventures. Their potential reward is, without a doubt, the highest of the group. A single successful drug or medical device approval could lead to returns of 10 times, 20 times, or even more. They represent a shot at a grand slam home run. However, that immense potential reward comes with an equally immense risk. These companies are all pre-revenue and burning through cash. Their entire value is based on a future event, a successful clinical trial that has a statistically low probability of happening. So for Aethlon, PTIX, Immuneering, the risk profile is binary. It's either a massive win or a near total loss. On the other side, you have SelectQuote and Emerson Radio. These are established businesses, not scientific experiments. SelectQuote is a revenue-generating company in a massive industry, but it's a turnaround story. The risk here is not that the idea is unproven, but that the execution is flawed. Emerson Radio is in a category of its own, what we might call a special situation or a deep value play. The risk here is one of slow, steady decline. So after breaking all of this down, what are the big lessons for an everyday person looking at stocks like these? The first and most important takeaway is to understand the category of risk you are taking on. Aethlon, PTIX, Immuneering. These are speculative ventures. You are providing capital for a scientific project. You must be fully prepared to lose your entire investment. Think of it less like buying a piece of a company and more like funding an ambitious research grant that might, against all odds, pay off. The second key takeaway is for companies like SelectQuote. Turnaround stories are incredibly compelling. It's human nature to root for a comeback. Before investing in a turnaround, see clear, consistent evidence